Robinhood's focused on three things. Number one, winning the active trader market. Two, increasing wallet share as we deepen relationships with our customers. And three, expanding internationally. Trading market share was up 14% for equities and 19% for options year over year. Gold subscribers were up 25% to 1.4 million, and assets under custody exceeded 100 billion, fueled by the strength of our 27% organic growth in net deposits. In Q4, we finished with $1.3 billion of net positive brokerage account transfers into Robinhood, and we've already exceeded that total halfway through Q1. We've been taking trading market share for some time, and now we're winning net asset inflows from every one of our major competitors. And as for funded customers, we've already grown more in the first half of Q1 than we did in each of the last 8 quarters. As we enter the year, I want to highlight some of the areas we're most excited about to drive growth in 2024 and beyond. First, for winning the active trader market, we're going to continue to invest in our user experience on mobile, where we're currently number 1 in market share. In addition, we will be launching a more feature-rich professional offering on the web for active traders. And we're also working on expanding our selection of tradable assets, in particular with index options and futures coming later this year.
Looking at 2023, we delivered significant profitable growth with record full-year revenues, record adjusted EBITDA, and record adjusted EBITDA margins. We also have strong momentum to start the year, as we added another 60,000 Gold subscribers in January alone. That is nearly 3 times the monthly average we saw in 2023. Now let's move to our 2024 outlook. We aim to deliver another year of revenue growth and margin expansion, and the year is off to a great start. January net deposits were nearly $4 billion. That January result was the highest monthly total since the first half of 2021, and we're seeing continued strength in early February.
We're very excited about that. A big part of our strategy is making Robinhood available to hundreds of millions of additional customers. And so I think we've talked about tens of thousands of customers in the EU and the UK already. The UK is still rolling out. So we're working towards the app being generally available to any customer in the coming months. And we know we've got a lot of work to do. There's a lot of features that exist in the US that our customers expect in these markets. And, especially on the crypto side, there's going to be things that we can deliver in those markets that are not available in the US. So the roadmap is full, and both of the teams have been grinding exceptionally hard to improve the product at a very fast clip there.
Great question. So first of all, when we look at core expense growth this year, we actually have a plan to take that down high single digits, perhaps even 10%. And then kind of looking out over the mid to longer term, we think that could be low single digits, perhaps even lower.
Over the past 10 years, we've taken market share of the trading activity. Now we're coming for the assets too. So our focus is increasingly going to be on driving asset growth. We just completed the 1% promo for ACATS in taxable brokerage accounts. We saw over $3 billion in ACATS in from that. And now we're turning our focus on the 3% retirement promotion on rollovers and transfers for retirement accounts that runs through tax season.
We're really pleased to be offering all 11 of the Bitcoin ETFs on the first day of trading. I think that was a great outcome for customers. So far, we're seeing nice interest in the ETFs, but we think it's additive. About 5% of our overall trading in crypto is through the ETF, with 95% still being on spot trading through the crypto business, and that's stabilized.
We're investing a large amount into crypto, both in the EU and domestically.
We saw it was mostly additive. There were some traders that sold out of spot and got to ETF, but that was really more of the exception. And we also offer the ETFs in our retirement accounts, which accounted for some of the pickup as well. So overall, we don't view this as cannibalization. It's additive, and we think it's really good for customers as well. We love the Gold program. Gold members have an ARPU that's multiples of our average ARPU. And you're right, the $5 a month is just a screaming deal. We want it to be obvious for every customer that they should be a Gold subscriber. So we're paying close attention to the behavior of Gold. They're bringing in more net deposits. They're using more of our products, and they do all of that with a relatively modest monthly subscription. We'll evaluate pricing over time, but all in, we just love the economics of the Gold subscription.